Hello traders, this is Dan Gibby, and in this weekly trade review we're going to do something a little different. In every one of these sessions we try to teach you something different, a setup, a strategy, and everything's educational, of course. What we're going to do this week is take a lesson that we gave you 2 weeks ago on FDN, an internet ETF, and we taught you the Bull Sandwich Continuation Breakdown. So this lesson, we're going to take that same pattern and we're going to talk about objective trade management, because we're still in the trade for our subscribers to our ETF Investment Trader. Just for a quick review here, this is the Master Trader approach. We're technical based pattern traders. No pattern, no trade, period, end of story. Then we look at that pattern and candlestick analysis in connection with the overall trend, multiple time frame analysis, support and resistance. Is it showing relative strength or weakness? Sure, volume secondary, we'll look at it. What are the broader markets doing and our market internals? And then this is always the last one, which really should be the first one, because without proper money management, you will not survive in this business. But it's at the end of our list, just because all of this is giving us a green light of a high probability trade, and then you simply calculate proper position size per your trading plan, and you enter and manage in between using your proper money management. That's what we're going to focus on today, is some objective rules of position management. This is the identical slide I gave you in the prior trade review, the Master Trader Bull Sandwich, which is two wide range, ugly red bars engulfing a big wide range green bar. And go back to the prior slide, that doesn't mean you take it, but you add the other concepts. So this is overall a very bearish pattern that originated from a breakout failure, 180 reversal, bearish gap. I got my 20 and 50 rolling over, and I have a price void. Price void means look to the left, and there's insignificant support over here for a short. So this is when we first gave it. I mentioned to you it's starting to accelerate lower near an area of support, and that we would be looking to take partial profits. Let's continue. This is now the current view of the daily chart of FDN. So we, and I'll show you in a moment, we have covered a half lot position and we're still in half. But let me now go show you our pivots for exits rules, and we will come back to this slide and apply it. Because look, we shorted it way up here and we have a huge open gain. We have over whatever that is, for almost $20 open gain. And then you see one green bar, and you're, oh my gosh, I have to cover this thing. And we're saying, no, you can cover half, but let's get into our rules here, and then let's come back to that same slide, okay? This obviously is the rules for being long, but it's just easier to talk about it this way, and then we'll apply it to the other one. Little stick figure is just assuming a Master Trader buy setup, which is a pullback and reversal on minor support in an uptrend. That's the pattern, a buy setup. But let's apply these rules. So on a buy setup, our entry is over this prior bar's high. So right here, we're in the trade, stop prior bar's low. So teach me, Dan, how to objectively trade this, because people have an emotional tendency to see a little bit of open gain and they want to take it, and they leave so many profits on the table. So let's go for our rules here. Keep the original stop from the entry. We're in the trade, we're now in position management mode. Only trail a prior bar's low if prices accelerate higher, which they did on FDN, accelerated to the lower. We'll come back to that. Otherwise, once you're halfway to target, we're going to use pivots to raise the stop. This is a pivot low in an uptrend. It'll be the reverse for a downtrend. What is a pivot low? We define it as 3 higher low bars to the left and right. Once you have those 3 to the left and the right, that is a new pivot low. Major support once this makes a higher high. So once we're halfway to target, we're going to trail these pivots. Once the high of the new pivot is exceeded, B here, so we're going to move stop to this prior low, because now that's major support in an uptrend. Once we're 80% of the way to our target, or prices accelerate, now it's okay to go back to a trail methodology under a prior bar's low. So that's what I say up here. Once you're in a profitable position, to obtain a larger position, you need to let it correct. Correct means retrace, and you have to do it objectively. My partner Greg Capra has an amazing obvious swing trading course, but also an advanced money management strategies course. He says, hey, as long as the stock is not near its destination, which is its target, then you have to let it retrace. Okay, so these are our rules. You're going to apply them to anything you're in. Of course, there's going to be different pictures, different situations. Is the market climactic, or the market internals bullish or bearish? But these are objective, marvelous starting rules. So here's the same chart I showed you a slide or two ago. This was our original entry. This is the current stock. So we had our original stop is up here. We shorted under the low of this. We're now in management mode. Prices started accelerating lower, took out a prior major support. So does that mean I should cover all of it? Well, if your trading rules say to do that, that's fine. But as I said, well, two things. This is in our ETF investment trader, where the bigger time frames, the weekly and the monthly, they have these price voids, and we are wanting to get bigger profits. You heard me say, the only way to get bigger profits is to let it retrace against you and use these trailing pivots. So we covered half over a prior bar's high because it accelerated lower far from the 20. So our subscribers, we sent out a text alert, cover half over this bar's high. Now we had to sit through green bars. We were prepared to sit through a retracement to let it make the pivot high. The opposite of what I reviewed with you in the other one with the buy setup, where you're waiting for it to form pivot low. And the reason we did that is because the bigger time frames. I'm showing you the monthly here, but the weekly obviously also. This thing's in a free fall. It's just getting dumped here. But price void, look to the left. Because of this fluid move up, there's no support over here. There's no congestion. There's no overlapping bars, major support. I don't know where this thing's going to reverse, but this could easily go down to $120 before this monthly chart reverses. So we have a half a lot. Our subscribers do. We're going to want, and now we're in trail pivot mode. So our new stop now is the week's high over this green bar's high. This was Greg's course I mentioned. You can go to mastertrader.com under our seminars, Advanced Management Strategies, AMS. It's amazing position and money management rules to make more money trading and investing, folks. It is priceless. Come see us in the Master Trader Green Room. We have a no-brainer $7 trial for a week. You'll interact with Greg and me in real time. We do pre-market prep. We have a gap list, our focus list, our open positions. We scan throughout the day, answer questions, and it's a phenomenal trading environment to learn. Every day is a marvelous learning this. I hope that helped. Any questions, email Greg or me, and we will see you in the next Master Trader Weekly Trade Review.